If your son or daughter were raising a round, what would you tell them to watch out for that most CEO founders miss?
When it comes to raising capital, the biggest mistakes I've seen didn't happen before the raise, they happened because of it. Raising and deploying capital can be one of the most defining or dangerous moments in the life of the company. To really dig into it, I spent over 5 hours in recorded conversations with 5 iconic leaders and investors. Together, they've built and backed companies worth billions, navigated successful exits, and lived through both turbulent and triumphant times. We've woven these conversations together into a mini-series to reveal the patterns and insights you simply can't see by listening to just one of the conversations. Whether you're raising, you're investing, or scaling, these conversations will change the way you think about capital, relationships, and leadership. Over the course of the 3 episodes, you will hear from Mitchell Green, co-founder of Lead Edge Capital, recently ranked the #1 global private equity growth fund by PitchBook, with investments in companies like Alibaba, Asana, Bazaarvoice, and Bytedance.
Don't get blinded by valuation. The highest headline numbers aren't always the best deals. A clean deal at a lower price, we always say, is almost always better for the entrepreneur over the long run than a complex structured deal at a much higher price.
Doug Song, co-founder of Duo Security, scaled it into a multi-billion-dollar cybersecurity company that was eventually acquired by Cisco.
So I tell founders, always right size, the amount of capital you're raising for the stage of the company and for what you're about to do next. You were a bit lucky at Duo, or I don't know if lucky is the right word for it, but there's a point every year at which Duo was cash flow positive. And so we had the choice, whether to lean in and raise more capital to accelerate and go faster, or to continue on the trajectory we were at, with the capital we had, and we're raising from customers, right? Which is the best kind of capital.
Gregg, founder of Redbox, which grew to over 14,000 kiosks and over $2 billion in revenue. He's also the former president and COO of Coinstar. Now he's the CEO of Dentologie, which has raised over $50 million and serves more than 60,000 patients.
You have to have some level of faith that they have been through this many times and that they're used to both good news and bad news, and they'll not panic if you share the bad news, but they will be upset, reasonably so, if you're hiding the bad news.
Julie Maples, co-founder of FYRFLY Ventures Partners, and she's a board leader for the V Foundation, where she's helped raise over $100 million for cancer research.
I think the most important thing is just to know and get to know the people that you're dealing with, to really make sure that you're understanding their perspective, what their values are. And that really comes down to kind of how people behave when the going gets rough.
And Brett Hurt, serial entrepreneur who founded Coremetrics, which was acquired by IBM. He took Bazaarvoice public, co-founded data.world, which was recently acquired by ServiceNow, and now leads Love Conquers Fear, a purpose-driven venture shaping the next generation of founders.
The ideal fundraise, for sure, the nirvana state for a company raising capital is when they truly do not need the capital except to grow faster. Like, that's the state that Bazaarvoice hit within its first year of existence. And because of that, we went from 0 to 100 million of ARR in 6 years, and we only raised 23 million and had 13 million left in the bank when we went public, right? So, Y Combinator says it's one of the top 3 most cash flow efficient SaaS companies of all time.
These guests, these are not like people that we reach out to through a friend of a friend. These are shared experiences that you know very well and we're in the trenches for. We're kind of like starting to peel the layer back on some of who these actual people are.
The trust that has been built with these folks allowed for these kind of conversations. It was a lot of fun for me. It was like a walk down memory lane for me too.
This is literally just the tip of the iceberg of people that you've impacted and businesses that you've come in and helped grow to successful valuations, successful exits, not just at the number, but in the way that they got there and the type of business and the type of leadership it took to get there. Your total number of billions of dollars of exits that you've helped oversee the growth of, right, by investing in the leader of the company, is over $17 billion over the last 30 years.
What started as a conversation about capital turned into a masterclass on trust, relationships, discipline, and the future of leadership in a world being reshaped by AI.
This is not to say, hey, let's train people up to learn how to raise a lot of capital and like be good at doing it, you know, and running effective teams. This, you know, for some people, you may hear this and say, gosh, I mean, maybe I'll just try and bootstrap this thing, or maybe I'll try and keep this thing as close knit as possible. And that's not a bad outcome for some people. And I think Mitchell, at the end of his interview, that's actually what he left his interview off with, is saying that some people, it's not for them.
Most leaders are asking the wrong questions. They're ignoring the signals, or they're operating with the wrong mindset when it comes to raising capital. We'll unpack the real costs often hidden in the term sheet, what great investors actually look for, and why raising money isn't the finish line. It's just a pit stop that will determine how or if you get to cross the finish line. Whether you're bootstrapped, Series D, or somewhere in between, these next couple of episodes will challenge how you think about capital, control, and what it really means to scale. What I've learned is the right capital multiplies your mission, but the wrong capital multiplies your mistakes. Let's climb.